But I'm really optimistic for this year. I really do believe that the markets are making a mistake on this interest rates thing. The appearance of rising rates is not the same as what's really going on, and I do believe that's an opportunity. And I'm putting my own money where my mouth is, okay? So I'm not just a talking head on TV. If I got this wrong, I'm gonna lose a bunch of money.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.
Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is Lobo Tiggre from the independentspeculator.com. Lobo, thank you so much for joining us today.
Thank you for having me back, Elijah.
Definitely. And now you've been talking a lot about the precious metal prices and how, especially with gold, we're seeing this extreme correlation, negative correlation really, between real yields and the gold price. And we're continuing to see that as the gold price falls. But in your mind, this is the market making a very terrible mistake right here. So why is the market making a mistake?
Right. So first, it's astounding how strongly it's correlating right now, like the day-to-day wiggles, which I normally don't pay that much attention to. Markets fluctuate. But it's just striking how on a day-to-day basis you'll see, what looks like interest rates up, gold down. Interest rates down, gold up. It's just a really strong thing. But it's not actually just a right now thing. I want to make sure that's clear. It's in our face right now. It's just striking how strong that relationship is at the moment. But we have data going back 50 years, ever since Richard Nixon closed the gold window and took the U.S. off of what was left of the gold standard. And you can look at, the dollar, you can look at unemployment, you can look at wars and crises. There really is no single factor that's more powerfully and inversely, as you say, related to gold prices as real interest rates, which is nominal rates minus inflation. You can't just look at nominal rates. There are times when inflation is high, rates are high, but the inflation is higher, therefore the rates are negative, and gold is up. So we have 50 years of data showing this as really the most powerful driver in this space. And it makes sense when you no longer have a gold-backed currency. But anyways, I just want to say that this is a long-standing relationship, and boy, are we seeing it in spades now. So, it's frustrating if you're dyed-in-the-wood gold bug and you're looking at all this money printing and more money printing coming. Why isn't gold going up? Well, it will. I think it will. But this long-standing relationship has powerful explanatory relevance right now. And one more thing, when I say this, I get a lot of people. My friends, my dear gold bug friends, oh, it's manipulation. They're just smacking it down. I'm not denying that manipulation happens, but if you explain everything with manipulation, then you don't explain anything. Manipulation happens all the time. It doesn't help us right now to say what's going to happen in 2021. But rates does help us because we see higher inflation coming ahead, and this leads to the mistake, right? We see the inflation coming, but it's not here yet. So you have nominal rates going up, CPI staying, not high enough. So it looks like rates are turning less negative, and that change is important. And that change is what's whacking gold right now. That change tells us what to look for in terms of what happens next. And I think what happens next is that CPI starts heating up, and you start subtracting those numbers. You get a real rate that turns negative again, and that's very bullish for gold this year.
And why do you see inflation picking up this year?
Well, I'm sure you've had 27 guests on who've given you many reasons for this. I don't know that I have anything breathtakingly original to add here. But let me just say, don't be fooled by all the talk from the powers that be of, this is just going to be the COVID release inflation. It's not real. Of course, there's going to be COVID release inflation. But that doesn't mean you can just ignore the fact that prices are up. If you're in the food store and prices are up, prices are up. Who cares why? And the other thing they'll say is, of course, inflation is higher compared to last year because we had the March meltdown last year. We had the COVID crisis last year, so it's going to look higher. That's not real. Well, of course, that's true. You can lie with the truth. That is true. But if inflation is higher this month than it was last month, inflation is going up. Don't look at last year. Look at the year before or last month. Case in point, as you and I speak, we just got the new inflation numbers out yesterday, and it was a 25% increase over the month before. That's not, why isn't that in the headlines? 25% increase, 33% increase. Well, because it was a tiny increase. You start off a tiny base. It was 0.3 before. It goes up to 0.4. It's only an increase of 0.1. Where's the headline there? But 0.1 is 33% of 0.3. It's a third, right? So it went up by a third. It tells us that it's picking up. So you have this big, chorus of, oh, it's not important, it's not real, pay no attention to the man behind the curtain. This isn't, or maybe the wrong quote. These are not the droids you're looking for. This is not the inflation you're looking for. Drive on. So I do think we're seeing, because of the money printing, because of the COVID rebound, just the easy money from the Fed, eventually these things have consequences. I think we're going to see high inflation. And as that impacts real rates, I'm very bullish for gold on that basis.
And how will this impact silver? Silver being a little bit different from gold, being an industrial metal.
Yeah, but I wouldn't say it's just an industrial metal. I really actually take umbrage when people say, it's just, it's just another industrial metal. You look at silver and gold on a daily basis, and they almost always move together, same direction. That's not true for copper or nickel or whatever. I mean, it can be super cycle, commodity super cycle, right? Commodities tend to cycle up together, but those are multi-year cycles. On a day-to-day basis, whatever is happening in the market can be very different for something that's an industrial demand versus a safe haven demand. And what we've seen is, it's been years now that people have been saying, oh, silver's just another industrial metal. It's not even used in coinage anymore. It's not included in Basel III, only gold, right? So it's just an industrial metal. The price data is telling us that's not true. The price data is telling us that silver still responds as a monetary metal. But of course, it is also an industrial metal. And I do think, I'm on the record saying that, I think we might see silver prices correlate more strongly with copper prices this year than gold prices. Because, long story, I don't know how far down that rabbit hole you want to go, but it is part of the Green New Deal, green energy revolution. You need silver for these photovoltaic panels. Even Tesla solar panels use a lot of silver. It's a significant amount of silver. There are technologies supposedly that would reduce or eliminate that, but that's not in the marketplace right now. Right now, if you want to have a green recovery or a Green New Deal, you're going to consume a lot of silver and a lot of copper, a lot of nickel, and these other key energy minerals. So it's part of that new energy paradigm. It's part of the new energy narrative that's really powerful in the market this year. So it could be interesting. It will be interesting, but we could see silver correlate more highly with industrial metals than gold this year, which would be an aberration.
That is very, very interesting. And yeah, we've seen quite a rise in copper. So you're saying that really silver could have a similar or even more significant rise than that?
What I'm saying is really it's the win-win metal. Because I do buy, by the way, my dear gold bug friends, I'm one of you. I do buy into the Austrian interpretation of monetary inflation leading to price inflation. I'm absolutely on board with this inflation of the money supply eventually trickling down to create higher prices, and we may be seeing that already. So that's good for gold and silver. But then you have this green energy paradigm really going into overdrive this year. Who knows how many billions the U.S. and the EU will put into this year. And a lot of that will find its way to silver and copper and nickel and some other things. But silver it fills both niches. So I really like it. It's absolutely, in terms of what I'm looking to buy right now, Elijah, maybe your question for later in the interview, but I'm researching copper and nickel and gold plays, but my marching orders for buying right now is I'd really like to find more great silver plays to put some money into.
Now, with regard to getting back to inflation, you said that we're going to see higher inflation, right? And you've also mentioned on your Independent Speculator blog that really you think the Fed will lose control of inflation, because right now, they're saying that they want inflation, around 2% or maybe a bit higher, but it's going to meet that expectation and then go above that, and they'll not be able to keep control of it. So can you expand on that?
Sure. Well, I don't want to go on the record making this big end of the world prediction. The Fed is going to lose control. We're going to have hyperinflation and it's going to be like Zimbabwe. That could happen. I do think that card is in the deck. And, how could anybody be so stupid? How could anybody lose control? Well, the cleverest people make the dumbest mistakes sometimes. And here's the key. They're talking till they're blue in the face about how it's okay for inflation to run high because now we have this new symmetrical goal. Somehow your money disappearing and dissolving into thin air at 2% per year is a wonderful thing. And it's been less than that for so long that it's okay now for inflation to be higher than that. So you give yourself permission to run too hot. And then what happens when you've gone, too far? You're already beyond that. And the tools they keep referring to that they say they have to, oh, don't worry, if it runs too hot, we have the tools, we can stop inflation in its tracks. Under normal circumstances, when you have a healthy economy or a healthier economy, maybe that's true. But remember, Volcker had to run interest rates up to high double digits to fight inflation, and that was starting from a much higher base. He had dry powder there to use at that time. We got nothing. We're at zero now. Real rates, we're negative now, and you're going to increase interest rates double digits from there to try to. It's a recipe for disaster. So, again, I'm not predicting that the U.S. is going to become the next Zimbabwe. What I am saying is that because they've already given themselves permission to let inflation run higher than they want, by the time they decide it's a problem, it could be that their tools don't work and it does spin out of control. It is possible that they do lose control. And at the very least, that results in much higher inflation for much longer than anybody right now in the mainstream is expecting. And it is possible that it goes off the deep end.
Now, with respect to that, you've also said that the stock market is overvalued. And one of the things that kind of people point to of why the stock market has been rising so much is the Fed really pumping a lot of money into the system. People say, well, that's been pushing up the stock market. If we continue to see that and then that turns into price inflation, wouldn't that just drive the stock market higher? So why are you calling for a stock market crash?
Well, I have not actually called, well, let me rephrase that. Since last March, we had this horrific train wreck in the economy and in the stock market. And at the time, March, a year ago, and into April a year ago, I just didn't think that the markets could survive that kind of shock and then just rebound. I did not believe that the Fed could wave its magic wand, kiss the boo-boo, make everything better, and everybody would rush back and say, oh yeah, risk on, let's go. I didn't believe that would happen. So a year ago, I was calling for another leg down, the next crash. The longer that didn't happen, the quieter I got on that. And I've said I'm not expecting. I am for, I think since the last fall, really. No more crash talk. It's possible, but I'm not expecting it. And I have started now to deploy the war chest that I accumulated a year ago, waiting for that crash. So sorry, long digression there, but I'm not calling for a crash. It is possible, but the answer to your question is yes, all this money printing, more easy money from the Fed could go to Wall Street the same way it has before. Now, there is a component of it that's going direct to consumers, right? Direct to voters. If you will. And that is different. And I do think that has more CPI inflation consequences, but a big chunk of it's still going to business and the Fed is still doing what it's doing that impacts Wall Street. So I find it very hard to believe when somebody asked Powell about this and he said, oh, no, there's really not much of a relationship there. There's a lot of other things going on. I also just heard an interview with, I don't remember his name, a BMO economist saying, oh, it's not just the money printing, it's markets are forward looking and you look at all this growth ahead and, the tech stocks are looking at all these wonderful, future of all this tech dividends and so on. All that's true. But just look at like the CAPE ratio or look at any of these ratios and you cannot say these markets are cheap. Many of them are near or at record highs, like 140 years highs. If you look at S&P numbers and so on, it's just outrageous. Now, that doesn't mean it can't go higher, but sorry, I'm going on too long. The answer to your question is yes, more easy money can make Wall Street go higher. And maybe if that easy money goes on for a year or two, it could do that for a year or two. It seems impossible. But there's also just the fact that you're skating on thin ice. At some point, even if there's a flood of easy money, if everybody's like, holy cow, I'm done. I've got my 10 baggers on Tesla or whatever it is, GameStop. I've made my money. I'm out. If at some point, just it's an idea whose time has come that, you know what, this looks a little pricey. I'm going to head for the exits. And that could spark more selling, which could spark more selling, which could trigger stop losses, which could trigger waterfall events. You don't need to have a cause. You don't need to have a spark here. It could just boom. So it's not a prediction. I'm just saying you can't count on the easy money to send things higher and higher to the moon, out of the solar system, whatever. Nothing goes up forever.
You're saying you're not calling for a crash really imminently, but the stock market's overvalued, and at some time it has to correct. Is that kind of what you're saying?
I mean, you're right. So instead of a crash, you could just have it kind of, roll over in a wave and just kind of peter down. Or you could have all this money printing create enough inflation that nominally the market seems to stay where it is, but adjusted for inflation, it's actually dropping. Right? If you have single digit growth in stocks over the next 10 years, but double-digit growth and inflation, that turns Wall Street into a big loser at that point.
And mentioning that, one of the things that we've touched on before in these interviews is the SilverSqueeze, right? And also the thing that we've seen in GameStop. Now, it seems like we're seeing a revival, at least in the GameStop stock, right? We're seeing over the last week, GameStop, running back towards nearing its all-time high. What do you think is driving that rise?
Well, I think these are fairly separate issues now. I mean, the Wall Street bets guys kicked out the silver guys. I don't agree with that. It's supposed to be a community with people being able to suggest investment ideas, but it is what it is. So, but it's become like a cause. And a lot of these people on the GameStop side, they don't care if they even lose money. You can go on Robinhood, you can buy fractional shares, you can just do it to stick it to the man because you believe that's what you're doing. I've actually seen arguments that this buying actually bailed out some of the funds that were in trouble, and they got a bailout with the help of the Reddit crowd. So I think that's one thing. I think the GameStop thing has become a cause with a large number of young people. I have a young man in the house, my son, who's no longer a teenager, but he follows this on a daily basis, and he's all excited when GameStop's back up again. And you can just, it's just amazing to me. None of my kids are interested in investing, but this son of mine, he tracks GameStop every day. Silver's another thing. So, I get raspberries when I say things like, I'm not sure that the SilverSqueeze can succeed. And a lot of people have already talked about how this is different. It's a bigger market. It's not like GameStop. It's not like the Hunt brothers. I get all that. So, I'm not sure that, we the people can really suck it to the man on silver. That said, I think it's very important. It doesn't matter whether we suck it to the man. It doesn't matter whether, whatever, ugly truths are hidden in the back rooms of JP Morgan and other such entities. We're probably never going to know the truth about all that stuff. But this thing, because of its association with the GameStop thing, got a lot of attention, got a lot of new eyeballs, got a lot of people to pay attention to silver who never did before. And people realizing, like, holy cow, this is important. Or, that silly thing that Warren Buffett says about gold, and in parentheses, by association, guilt by association, silver is just a shiny pet rock, right? And people are realizing, no, gold and silver, primarily silver, but these things are useful. They're used in industry. We need silver for the green recovery. And I don't think once people learn something like that, it gets unlearned. Now, is silver going to become, this super popular metal with all young people forever? No, I don't think so. But if any, not even substantial, but any significant fraction of the young people out there remember this, and they see people making money in this space. And if I'm right, there's going to be a lot of silver investors going to make a lot of money this year. And young people, they may not have decades of experience, but they're not stupid. They're looking for winners. They're not going to be hostile to silver, I think, because it's not GameStop. They're going to look for whatever's working. So if it's working, I think you could see very big sort of knock-on events. Like the short version is, I think this adds momentum to the silver trade. These new eyeballs, once it starts moving up again, you're going to get more people piling in. If it starts moving down again, you're going to get more people heading for the exits because they're not in love with silver. They're not, 50-year silver buds. They're people just looking to make money now.
I think that's a really interesting point you make, that even if SilverSqueeze doesn't work as it's intended, there's a lot of different intentions and there's a lot of different things that have brought people to the silver market recently. And I think one of the things is that it's bringing in, as you mentioned, a lot of new investors and a lot of new speculators and a lot of people who just kind of want to hold something real.
Let me interrupt because I know exactly what you mean. One of my hobbies for decades now, gosh, it's embarrassing how long, is teaching economics and entrepreneurship to young people. And for whatever reason, I started doing this in Eastern Europe. And it's just a fascinating thing when you put an ounce of gold or silver, which is slightly larger, of course, into a college student's hand. And you just put it in there, right? And he whoa, right? He sees this little coin. You put it, and you could just see their eyes open, like they can feel the weight of it. They feel that it becomes more real to them, and they ask questions. And suddenly, people who never could have cared about mining before crypto mining made mining fashionable, were suddenly interested. I have seen this thing. You put a coin in somebody's hand, and it changes their attitude.
Definitely. Well, Lobo, Tiggre, thank you so much for joining us today. I guess before we let you go, are there any last thoughts you'd like to add, and where can our viewers find you online? Well,
thanks for that. I guess I went on too long again, but thank you for the opportunity. Appreciate reaching out to your audience. I just want to reiterate, I'm not a permabull. I'm willing to sell. I'm willing to say, hey, that something looks overbought. But I'm really optimistic for this year. I really do believe that the markets are making a mistake on this interest rates thing. The appearance of rising rates is not the same as what's really going on, and I do believe that's an opportunity. And I'm putting my own money where my mouth is, okay? So I'm not just a talking head on TV. If I got this wrong, I'm going to lose a bunch of money. But if you agree with me, please do come to independentspeculator.com. We have a free weekly service called the Speculator's Digest, which I promise if you sign up for that, you get one email per week. It's not a flood of spam, everyday advertisements or something. And I hope you'll do business with me in the future. But I do my best to give guidance and educate people about all of these things through the digest.
Fantastic. Well, we always appreciate your insights and definitely your very in-depth explanations. I don't think you go on too long, Lobo, but thank you so much for your time and your insights.
Thank you, Elijah.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.